Hello, everyone. Thank you for joining us for the latest Central Valley housing market update. My name is Oscar Wei. I'm a senior economist and a director of research at the California Association of Realtors. It's a pleasure to be here to share some information with you about the economy as well as the housing market. Um, we have been doing this for a few times now, and we have been doing the regional stuff actually for the last couple of weeks or last few times since we started the video recording. So today I'm going to go through some of the economic update as well as some regional outlook for you guys in the next 20-25 minutes. Um, in order to go through the economic and a market update, we have to kind of look at the coronavirus pandemic update as well. So I'm going to spend the next couple minutes to talk about the current pandemic situations, and then I'm going to go on to talk about the economy and the market update. So, for many of you who have been listening to the news, you probably know for the coronavirus pandemic situation, we have gotten worse in the last couple of weeks. We have a resurgence in number of cases in the last couple of weeks since the state reopened, and particularly, if you look at some of the statistics released by the state, the number of positive cases actually have surged past 220,000 as of the end of June. In the number of new cases have been increasing by 6,000 in the last few days. The recent uptick in positive cases obviously have something to do with active listings or active testings. I'm sorry, but at the same time, I think it has a lot to do with people being a little careless since after the reopening. Now, active testings, there's no doubt that we have more, and that would definitely increase the number of new cases. But at the same time, it should not affect the number of positivity rate. That is the number of people who get tested positive when being tested with the testings. So that number has gone up in the last few weeks from 4.4% to 5.6% in recent recording. And the number of people who have been hospitalized also have gone up. So the number of people who have been hospitalized doesn't necessarily hinge on number of active testings. So if you take a look at the next, the slide on this left-hand side, you'll notice that we're seeing a really sharp uptick in hospital patients in last couple of weeks. It surged all the way to 6,466 at the end of last month. Positive rate also have gone up from 4.4 to 5.6, as I mentioned earlier. And that's very, very concerning because if we actually continue with this trend, the state will have to close again and we have to shut down the economy as well as the market. So that's very concerning. So we need to make sure that all of us continue to practice our social distancing measure as well as wear our face mask to make sure that we keep this pandemic situation under control. If we do that, we don't have to have the state shut down again, and it will definitely will not hinder the economic growth if we actually can all do that. Of course, in addition to the concern about public health, we also should be concerned about economic recovery. The coronavirus pandemic situation has had some negative impact on the economy. If you take a look at the latest economic output, the GDP report that was released a couple 2 months ago. Yeah, take a look at the numbers that we have on here on the slide on the right hand side. On the right hand side of the screen, you see that in the first quarter, the GDP or economic output actually dropped 5%. That's actually is the largest drop that we have had for quite some time. In fact, the last time we had a bigger drop was in the third quarter of 2008. That was another recessions, what we named the Great Recessions. And this time around, it's from the onset of the recessions, we're already dropping 5%. In the second quarter, we believe that the number is going to be even bigger. Now consider this, in the first quarter, in the last couple weeks of March, we had the shutdown. And just because of the shutdown, we've lost 5% already. Imagine what happened if when we have April's down and also part of May's shutdown, and then a gradual reopening in May, and also some slowdown in economic recovery in June. That will actually take the second quarter numbers down to a number that is definitely more significant than the 5%. Now, many economists believe that that number will go down to the decline will be about 30 to 40%. And I'll show you those actual numbers towards the end of the slide. We can take a look at some of the other numbers to see if that may justify the significant drop that many of these economists predicted. Now, particularly, we can take a look at retail sales. Retail sales get reported on a monthly basis, and if you take a look at this slide here, it shows that we did have a quite a big drop in March, 8.2%, but we followed with an even bigger drop of close to 15% in April. May number actually looked a lot better with an increase of 17-18%. Now, the reason why we have a bounce back in May is because of the assistance program, the federal financial assistance program, namely PPP and PUA, all those assistance program, as well as the unemployment assistance that get distributed in April. But also we have the California as well as other states reopening that happened in mid-May. And as such, we saw a bounce back of close to 18% in May. Now, even with an 18% increase from the month before, now these are month-to-month increase, month-to-month percent change. So even with an increase of 18% from the previous month, May's number is still down from the previous year by about 5 or 6%. We don't know what the June's number is going to be like, but we will have some June's number probably in the next couple of weeks or so. It's probably going to be not as robust as what we saw in May. When we put everything together, we believe that it's still going to be down from last year. Now, whether it is going to be 30% or 40%, that's really hard to say. So let's take a look at some of the other numbers and see, if we're seeing, if we can get any trends, from those other indicators. Let's look at labor market. If you look at labor market, we have heard of, unemployment rate. The unemployment rate numbers actually just came out, for June, and June's number shows an unemployment rate of 11.1%. If you look at that number, particularly, that actually is a very high number, compared to some of the other numbers that we have seen earlier this year, before pre-COVID-19. The unemployment rate was 3.5%, 3.6% or so. But if you compare it to the last couple months, it may not necessarily be as shocking, because we did have a 13 or 14% unemployment rate in the last couple months or so. So we actually improved a little bit, and the improvement is due to some job growth. In the last couple months in May, we actually saw an increase in job growth in jobs of 2.7 million at the national level. And then in the recent month in June, we saw an increase of 4.8 million. So together, for the last 2 months, it's actually increased by 7.5 million, which is a very big number, the biggest that we have seen for quite some time, if not, a record number. But keep in mind, in April, because of the shutdown, the economy actually lost about 20 million, more than 20 million jobs. So we have recovered a little bit, but not even half of it though. So the reopening did help, boost jobs, but we're still down. We're still down, in fact, by 15 million jobs from the pre-COVID-19 level. So we're definitely not out of the wood. And with so many people out of jobs, obviously that's going to affect the economy. That's going to affect the consumer spending as well. If you look at some of the more recent numbers, you get a better sense of whether we can whether the recovery will continue or how fast the recovery will continue. You look at the weekly unemployment insurance claim. Now, these numbers are numbers of people who filed, initial claim or file an unemployment benefit claims for the first time. We started off at the beginning of March with a very low number, less than 300,000, but then it shot up significantly when we had a shutdown from 3.3 million, and then again to 7 million before dropping down gradually. With 13 consecutive weeks of decline, we're still at 1.4 1.42 million, 1.43 million, slightly below 1.5, which is still a very, very high number. Um, and it doesn't look like we're actually improving that much in the last few weeks. So this could drag on for a little bit longer, especially when you look at, how many people are still claiming, for unemployment insurance. Now, the number that I showed you earlier, those are people who filed, for the first time, and some of those may actually have um, may have gotten back to work. Maybe they got furloughed, and then now they back to their old job. But we still have about 20 million, close to 20 million people actually continue to receive unemployment benefits. That's actually a very significant number, knowing that the in the labor market, in the labor force, we have about 165 million people working in the labor force in the U.S. So that's about 12, 13% of the total. That's a significant number. And if you take a look at those numbers again, it doesn't look like it's going to, it's slowing down that much on a weekly basis. For California, that number also is high. It started off again at the beginning of March before coronavirus pandemic. We have on a weekly basis we have 43,000 people filing an initial claim, and then it shot up to over a million, and then it gradually slowed down. And recently, the latest week, we have 280,000. Still about 6 times, 7 times higher than what we normally would have seen. Um, but of course, even a little bit of encouraging news boost up consumer confidence. When people started seeing, the labor market actually seeing a little bit of improvement, and also the stock market, financial market at the beginning of last month or in early June or late May started seeing a little bit of uptick. They feel a little bit more confident. Plus, of course, the federal assistance program probably helped a little bit. And as such, the consumer confidence actually increased at the beginning in June from a low of 85, 86 in May and April and May, pop up to 98.1. But whether that number is going to continue to improve is in the next couple months is hard to say, because we did have a resurgence in coronavirus, as I mentioned, and that might actually create a lot of uncertainty about the for consumers, and that could lead to some leveling off or maybe some decline in consumer confidence in the next couple of months. What about the housing market? The housing market is actually doing a little bit better, believe it or not, based on some of the weekly numbers. Now, if you look at just the monthly statistics that we released about a month ago or about 2-3 weeks ago, that may not necessarily tell the whole story. That number, the monthly statistics actually shows that we actually might have we have gone down in terms of sales for significantly for another month. Now, keep in mind though, closed sales, that's closed sales, and closed sales represents what happened about a month ago, because many of those who are interested in buying a house start negotiating open escrow in April, and then it will reflect in the closed sales in May. So this closed sales number reflect buying interest about 30 days ago. So 30 days ago, things were not looking as great, not looking as better, I should say, as what we're seeing now. And I'll show you those weekly numbers in just a minute. But let's first take a look at the monthly. The main numbers at the state level dropped another 41%. Now, it's dropped after a 30% drop in April, and then another 6 or 7% drop in March. So we had back-to-back drop, which led to the first 5 months, which is the year-to-date number, declining by 12.9%, which means the first 5 months of the year of 2020 compared to the first 5 months of 2019, it dropped 13% in terms of sales. Not a surprise. We expected that to happen. But what about price? Price also dropped about 4%, close to 4%. And unsold inventory also remain at a low level. I expected that number to actually be a little bit higher, but 4.3%, which is still very, very tight, with days on market at around 17 days, and sales price to list price ratio pretty much flat compared to last year. Now, if you look at just the closed sales numbers, yes, it's not necessarily a very good number. But if you look at the pending sales, what's whether people are interested in buying in May, that goes into open escrow, it looks a little bit more positive. Look at the pending sales number. Pending sales actually surged in May compared to April. In fact, it surged significantly by 67%, compared to April. with that 67% increase in the pending, which will close in June, that suggests that we are actually going to look a little bit better in the upcoming months, or when we finish up the June sales figure and we release our report. And in fact, the pending sales number in the last couple months seems to show a good reflection of what closed sales actually would look like. If you look at the April pending sales number, which dropped about 43%, and if you look at how it compares to the 41% drop in closed sales, that's actually a pretty close call. So if we saw a drop of pending sales by 5.5% in May, most likely we'll see a single-digit decline in closed sales in the upcoming in June when we report the number. We will look at those numbers in the next few days or so, and we will probably report those numbers in about 2 weeks. So it's looking better, as far as closed sales are concerned. And for Central Valley, it actually is the region with the smallest decline as compared to, say, San Francisco Bay Area and Southern California. It dropped compared to the state a smaller number, 36-37% as compared to 41-42% at the state level. Now, this is still a big number, don't take me wrong, but it's better than some of the other regions. If you look at individual counties, some counties are doing better, some counties are not doing as well. But here's the weekly number. Here's the latest weekly number that will give you some indication of where the closed sales are going to be in the month of June. So if you take a look at the latest number, it does look like, let's look at some of the counties like Fresno. It does look like when it bottomed out right here, in the middle of maybe May or June or so, it started rising. Same for Kern County. It's a little hard to look at Glenn. Same for Kern County. Let's take a look at Sacramento. It started rising. It actually surged a little bit, started rising. And same thing for San Joaquin's, maybe Stanislaus and Tulare too. But you also should notice the latest week. It seems like the latest week closed sales actually softened up a little bit. In fact, if you look at the latest week, a lot of the areas actually show a decline. Now, this could be due to the fact that there might be concerns about these resurgence of the coronavirus pandemic, but also it could be other reasons as well. I mentioned about lack of supply, which I'll show you in a minute. We talked about the market. Typically during this time of the year, the home buying season is between April to June. Is it possible that we might actually be closing in on the end of a home buying season? And as such, we're seeing some slowdown. Now, we have always been hoping that, because of the shutdown in for the state, the home buying season will actually stretch out a little longer. But whether that is going to be the case, it's hard to say. We'll have to observe, for another couple of weeks or so to see what's going on. What about pending sales? As I mentioned, pending sales actually is a leading indicator, and it may show what's going to happen, in the upcoming months in July and maybe in August. So pending sales, also have been seeing some upward trend until recently. Fresno actually started slowing down a little bit. The county that actually showing some positive uptrend is Sacramento in the current month and the current week. It actually continued to rise to a very high level, which is encouraging. Some of the other counties also slowed down, like Stanislaus slowed down a little bit. But all in all, I think we are seeing, most counties dip except for Sacramento. So the session suggests that we are going to see a slowdown, or the market actually is closing in on the end of a home buying season. That's hard to say. Again, it's only 1 week, so we have to observe a little bit longer. If you go back to some of these other counties, some of these counties are actually continue to show a 1 month dip, a one week dip. So we have to keep an eye in the next couple of weeks to see where things are going to be. Now, one of the motivating factors that encourage people to buy in the last few weeks are the low mortgage rates. Mortgage rates are at a very, very low level, in fact, at a record low level in the last few weeks. depending on which source you look at, if you look at the Freddie Mac's number, the average 30-year fixed rate is right around 3.1, 3.15 or so. If you look at the Mortgage News Daily, it has gone down to below 3%. And it probably will stay low for quite some time. And low rates really, really help, home buyers. And if you take a look at the mortgage payment, we did a calculation with mortgage payment at state level using the state median price, comparing this year to last year. Now, if you look at the median price for May 2020, with the current interest rates and the current median price, the monthly payment is $2,040. Compared to last year, it actually dropped by about $300, due primarily to drop of interest rates by maybe about 80 basis point, 90 basis point compared to last year. How does that work out for Central Valley? Central Valley also dropped, not as much as the state as a whole, but if you compare the monthly mortgage payment, Central Valley actually dropped from 1310 in May 2019 to 1220, a drop of close to $100 a month, and that's a 7%, close to 7% drop, which is significant. Now, we are also seeing some drop in price, as I mentioned earlier, at 3.7%, which is actually the first drop in statewide median price since February 2012. We had a good run, but the good run had to end at some point, and with the coronavirus shutdown, it might have discouraged some people to offer a good price, to offer the top price for the property, despite the fact that we actually have tight supply. So in many areas, in many price segments, we actually have been seeing decline, but not in the lowest price segment. If you look at the lowest price segments, from 0 to 20, which means somewhere between this price range represents somewhere between 0 to 300, it continues to show some price growth. So in many of the Central Valley areas, counties, we probably have been seeing some price growth. And the reason is we still have very, very tight supply in many areas. Now, in some of the other areas, more luxurious or high-end areas, we're seeing some decline. So in Bay Area, probably a little bit more decline. In Orange County, probably a little bit more decline. And as I mentioned, tight supply is one of the reasons why we're seeing some support from on home prices. Active listings actually have been dropping quite a bit. For the last few weeks, or last few months, I should say, we actually have been seeing 25% or more decline in active listings. The latest monthly statistics in May actually dropped by 30%. With supply that tight, it's gonna be tough, for people, for buyers, not to compete with each other and offer a higher price. So that's why we have a little bit more bidding. In Central Valley, if you look at the housing supply, it actually dropped from last year also from 10,000 to close to 7,000. That's a 34% drop in active listings, quite significant. And it will probably going to get worse before it gets better. We're probably not going to have many sellers listing their properties in the next few weeks or next month or so because of the coronavirus pandemic situation. Let's take a look at some of the weekly number and see if we're seeing, a more upward trend. If you look at the new listings by county and in the more recent weekly number, as recent as last week, you can see that that orange bar at the end of the on each county shows a decline. Almost every single county declined except for San Benito. Some county, for Sacramento, it dropped 10%. For San Joaquin, a lot of double-digit decline, for many counties in the Central Valley. So the active listings picture is not really looking that well. We're still going to go through a very, very tight supply situation for at least the next few months or so. What about other indicators? Now, despite the fact that we have supply constraint, we're still seeing, some encouraging signs in other indicators, including showing activities. If you look at the state, showing activities actually increase, continue to increase. Take a look at the orange line here. This orange line shows the percent change in showing activity as compared to the beginning of the year. It has been increasing up until mid-March, and then it declined because of the shutdown significantly by 20-25% before showing up again. And it continued to surge past the beginning of the year, and in fact, it surged past last year's level around early July, or early June. And if you look at the number compared to last year, right at around this time, we are about 55% higher than what we were at last year. Very encouraging in that sense. What about applications? Purchase applications. As I mentioned, mortgage have been very, very low, so we have been having a lot of people motivated to get into the market. In fact, in the last few weeks, we have been seeing double-digit increase in mortgage purchase applications when compared to last year. So that's encouraging. I think people are trying to catch up with the loss of the last 2 months. So I still do believe, that despite the fact that we're seeing some increase in the last few weeks or so, it's going to be hard to catch up, for the loss of the last 2 months, partly because of tight supply situation. Let's take a look at the economy, and let's take a look at how we expect to recover it in the next for the rest of the year. Now I said the first quarter we had a 5% decline. In the second quarter, it's most likely going to drop somewhere between 30 to 40%. What about the third quarter? Third and fourth quarter, it's looking a little bit better. Assuming that we're not going to get a second wave, a lot of economists believe that we are going to increase by 20 to 30%, 10 to 20%, and then follow up with another 10% or so. But even with the third quarter and the fourth quarter doing better, for the year as a whole, we probably will see a decline. If you look at UCLA's number, UCLA actually suggests that we will be dropped by 8.3%. Very specific, 8.3%. Bank of America believe that we will decline from last year by 10%. It's going to take some time to recover for the economy. The housing market will probably look a little bit better though. We did a lot of scenarios and we haven't finalized our forecast yet, but take a look at one scenario. We believe that we're going to see some bounce back in the next couple months or so. And it's going to stay below last year level, but the decline from last year is going to be somewhere in a single digit, maybe about 5 or 10%. So it's going to be a significant bounce back, from the bottom, and that happened in May. And even with that, so if we have a decline, for the rest of the year with 5 to 10% for the next few months or so, we'll probably end the year with about a 12% to 13% decline. What about price? Price might be holding up a little bit better. We saw a drop of close to 4% in May. Now that could continue for the rest of the year, and that's kind of conservative. We actually we think that it might be a little bit more positive than that, but let's keep it conservative for now. And if that's the case, we could actually see the year, for the entire year, dropping about 2%, less than 2% for 2020, and it will continue to improve in 2021. So let's wrap it up. Let me give you some key highlights of what we discussed. For the year, for the economy, we are probably going to see a bounce back, and it's really starting to see some bounce back. But the recovery is going to slow, especially since we have to be concerned about what's going to happen with the resurgence in coronavirus. For the housing market, we expect sales to actually improve in June. July, August, and so forth, we probably will continue to see sales dipped from last year by about 6 or 7%, or maybe even 10%. But the drop is less than what we previously anticipated. We are seeing some leveling off in demand, though, so that is something to be concerned about. Part of it is probably because of supply. Lack of supply is something that we can't control. It doesn't seem like we will be able to improve the supply situation that fast. So in the next few months, we probably will have to deal with the supply issues. Now, supply will constrain sales, will lead to lower sales, but at the same time, will probably keep prices from falling significantly. So we do expect a slowdown in price, but in terms of the decline, probably not a whole lot. As far as the housing market is concerned, I think it will be a brighter spot. It will be a bright spot in amongst other sectors in the economy. We probably will be a sector that will help to pull the economy out out of the recessions. but it's going to it's going to take some time. It's not going to be recovered in the next few months or so, maybe not even 2021. With that said, that's wrap up the outlook. We will continue to monitor, the market conditions and the economy in the next few weeks, and then we'll report back when we have a chance, probably in 3-4 weeks or so. Thank you for listening, and have a great rest of the week, and stay safe and stay healthy. Bye bye.